Good morning, traders. It is 8:01 a.m. Chicago time on the 25th of November, 2014, Thanksgiving week. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Overnight, as far as news, not much. Very, very light news items. Germany Q3 final GDP came in line, barely missing a recessionary reading. Q on Q came in at 0.1 versus 0.1 estimated, in line. Final GDP data confirmed it narrowly missed a technical recession. Other than that, there's some comments by ECB's Nowotny and others, but there's really not much worth mentioning overnight. The Iraqi oil ministers announced that oil prices are not acceptable. Something needs to be done. The Saudi oil minister says that this is not the first time the market has been oversupplied, not expecting a difficult OPEC meeting on Thursday. So it'll be interesting to watch that. I'm going to look at crude oil technically in a bit. S&P fair value negative 1.8 points. The S&P cash is trading 1.8 points higher than the futures. As far as economic releases, we just had our housing number. September FA house price index came in at 0 versus 0.4 expected. September S&P Case-Shiller 20 city month-on-month came in at 0.34 versus 0.3, year-on-year 4.9 versus 4.6. House price index 1732 versus 1732.7 versus 1733.28. Looking ahead, 9 o'clock Central, we have the Richmond Fed Manufacturing Index. 16 is the estimate. Consumer confidence also at 9 o'clock, expecting 95.8 versus 94.5 prior. And then looking ahead at 10:30, Treasury to sell 13 billion in 2-year notes, reopening, and also 4-week bills at the same time. At 12 o'clock Central, Treasury sells 35 billion in 5-year notes. Also 12 o'clock, Germany's Chancellor Merkel delivers speech at European Family Business Conference, and then I don't see much else. After the market closes at 3:30, we have the weekly API crude oil inventories. Looking at yesterday's, and by the way, most of you have probably heard the verdict on the Ferguson case. If you don't know anything about it, this is a very contentious case where a police officer shot a black person who was supposedly raised their hands to surrender, but the officer still shot at them, and it caused a fair amount of riots and a lot of arming by the Pentagon of various towns or in the area. And the grand jury decided yesterday not to indict the police officer in the case. And the expectation was for the residents of Ferguson, Missouri, to riot, and they did. I have a strong opinion about this, but we'll pass on that. This is not a political show. However, the fallout from that on the market's not expected to be much, if anything at all. There were demonstrations here in Chicago and also New York and various other cities with people just basically protesting the treatment of citizens by police forces around the country. I guess the best way to respond to that is just to destroy some shops and put people out of business and put people out of work. But I'm not in that situation, so I don't understand. I cannot possibly understand what they must be going through, so I won't judge. Let's look at the technical picture. So yesterday played out exactly as expected. under hypo 1. It did not make an attempt at the high. The expectation was for it to drift downwards towards 61.75, 62, find a base, and then start pushing towards the high. It did not do that. However, I did expect a very choppy trade, very quiet trade, and that's exactly what we got. Yesterday opened opened in range, open auction in range. Opened right at 66.50. Put in an opening swing low at 65.75, an opening swing high at 69, and basically drifted downwards before coming back up. And essentially for most of the day, we had a 4.75 point range. We finally broke through the IB low by 1 tick, only to find buyers taking it back and keeping it in range. Early on, the only significant thing it did early on is it broke the overnight high that was expected, and then it basically fell into Friday's range and just sat, or value area, and just sat there. The profile shape is a box profile shape showing wide consensus in a tight range. So what the market's saying here is between these prices, 67.75 down to about 65, they like the prices enough to just trade there. There's no taper on the top, very boxy profile. Market's just not willing to move value or prices out of this range. Overall, a 5-point range for the day. This is the tightest range we've had since July of this year, July 14th of this year. So let's go back and look at July 14th real quick. Here's July 14th. This day basically saw the same kind of range, 61.75 up to 66 and a quarter, 4.5 points or so, and it just did not do anything. There's a better profile shape on this day. There's a better break of the IB, but overall, pretty tight range, pretty low volume, 846,000 contracts. The next day, following this consolidation compression day, we had a pretty wide-ranging day. We had about 18 points of range. In the day session, as you see here, it opened in range, pushed right through by 2.5 points or so from the high, and then it broke all the way down, closed this gap before it found buyers, and then it just sat sideways. I'm not saying today is going to do that, but this is a very typical, this is what's expected after a compression days for the market to break out. The difference between this day and ours is that this day is actually out of range on a gap, so there's plenty to do below. However, with yesterday's action, we had the gap already, we had the test lower, and we opened in range yesterday, and we traded on an inside day. The 14th of July was not an inside day, so it's just simply the next closest day to the range that we've had, and we have to go way back to July to find that. As far as volume, the yesterday's volume was the lowest since March of this year, March 13th. Only 616,000 contracts traded in the day session, very low, about half of the normal volume. So the market's really not seeing much participation. It seems like the bigger money has taken a week off for Thanksgiving this week. Not much is expected. Now we broke higher on the overnight, so let's look at the overnight session. So the overnight session is very technical in nature. Opens right where it closes, tests the prior day's high at 69 to the tick, tests the prior day's low at 64 to the tick right here, and then starts to drift up and see some turbulence here on the European session, and then um, basically on the European Open, it saw a little pop on the debt sales announcements by the Netherlands and Spain. Had fairly successful auctions, and then finally it broke higher on the U.S. GDP release at 7:30 Central. Some pretty heavy volume trading here at 69.50. You can see here a fair amount of volume went off at 69.50, but the overall profile is not telling us anything. The mid at 68.50 also represents the key LVN on the overnight session, which is right up against yesterday's high. So I'm interested to see what happens on the pullback to 69, 68.50. That'll give us one clue as to who's in control of the auction, which is what our job is. Our job is to identify who's in control of the auction, and then find a spot to trade in their favor, in their direction, with a clearly defined risk preset. The overnight volume is fairly low, 144,000. It's about it's a little over half of what on a relative basis on what we would normally expect. It's basically the same as what we had on the Sunday night session. Again, the market's saying that there's not much participation here. I do not expect prices to run away today. We will be gapping up. We will still be in range, in the range of the high day last Friday. The overnight session's already made a high on Friday, so bulls are in control again. Essentially what I'm looking for on the open is responsive selling on a retest of 69, 68.50. If that doesn't hold, I'm looking for 67, and then a push to 66 or so. I expect that to form a decent base for a turn back up. If it even gets that deep, I think it'll probably see support in the 68.50 area for a continuation higher into 74 and 75. That's my primary hypothesis for the day. I don't expect the market to do very much today. I don't expect any aggressive selling or buying to come in. However, if it does, that would be a nice little gift for us here as we stick around and watch the market into the holiday. That's really all I had for you. It's again, the primary hypothesis is responsive selling into 69, 68.50 for some support and a push through to 75, 76 area. If it does not get support at 68.50, I expect it to push through to 67, 66 and find support and chop there. I do not expect the overnight low to be broken. However, the better trade, the easier day trade is if it does and starts to aim for 61.75 to close the gap and 60.75 to retest this naked point of control. However, I do not have high hopes that we'll see that kind of volatility today, but we'll stick around and we'll see what happens. I want to remind Stage 5's traders that there will be a webinar today after the close. Look for an invite in your email to that, and then on Friday. Fridays, the markets are open, but it really is a holiday, so there's not going to be a webinar that day as we normally do, but we'll have an open a publicly open webinar next Tuesday for all to attend, and I'll post the link for that on my Twitter feed. I want to remind you that it is a holiday week. It is a week here in the U.S. It's a week for Americans for Thanksgiving. It is not fun to go into Thanksgiving with a big hole in your pocket, knowing that you have some expenses coming into Christmas and all that. Please watch your risk, define your risk, accept it, and then put on the trade. Do not go in there and gamble just because things have not been going so great and things have been very quiet this week. Just recognize your emotions, but you do not have to react to how you feel. So trade from the perspective of only staking your money on higher probability trades and not out of feeling like you need to do something while you sit here in the markets trading. Good luck today, and I'll talk to you soon. Take care.